IRS Form 8611, Recapture of Low-Income Housing Credit. So this tax form is filed by taxpayers. It could be individuals, it could be businesses, pass-through entities that previously have claimed a low-income housing credit on one or more buildings that qualify for a low-income housing credit, and then sell it before the end of the recapture period. Typically, for the low-income housing credit, you'll initially file on IRS Form 8586, and you will attach an annual statement on IRS Form 8609-A. So for as long as you're continuously reporting this credit, then you can continue to maintain, or you can continue to take that credit in each year that you own the building. However, if you sell it before 15 years, you may owe a recapture amount. And so IRS Form 8611 will help you calculate the amount of recapture, if any. Sometimes you may not have a recapture amount because of changes in basis and things of that nature. So we're going to walk through this tax form. Couple things I'll point out in the instructions first. So you are depending on a significant amount of information from previously filed forms. The IRS Form 8586, which is the low income housing credit, IRS Form 3800, if applicable, that's the general business credit, IRS Form 8609-A, and IRS Form 8609, which is the low income housing credit allocation and certification. So, and then any previously filed forms 8611 if you have any. So you do not have a recapture that applies if you satisfy the requirements for avoiding the recapture as outlined in business building dispositions. You also would not have recapture if you disposed of an ownership interest in a building that you held through a partnership to which Internal Revenue Code 42J5 applies. This is the part of the tax code that applies to a partnership that elects to have the tax treatment applied at the partnership level and not passed down to individual partners. And then 3, if the decrease in qualified basis does not exceed the additions to qualified basis for which the credits were allowable in the years after the first credit year period. And finally, 4, if the qualified basis is reduced because of a casualty loss, as long as the property is restored or replaced within a reasonable period. So that's a lot to say, but let's take this one step at a time. And we'll begin at the top of the form. We've already completed the calculation. So in item A, we're entering the name of our taxpayer. In this case, it's Doe Enterprises. We'll just call this a single person disregarded tax entity. It's a single person LLC. John Doe thinks he knows taxes. He doesn't realize that just because he set up an LLC doesn't mean that it's he, himself, and him. So he's still kind of, for tax purposes, treated as if he's his company is the taxpayer. So we'll put the identifying number over here in item B, the address of the building. If you have multiple buildings for which recapture might apply, then you'll have to use a separate Form 8611 for each building. So in this case, we entered the address, the building identification number as it appeared on all the credit or the credit agency paperwork. So when you first apply, you're basically having the building identification number as outlined here on your original 8586, and it should match the building identification number on your 8609A. And then the date that you place this in service, this is going to be basically the amount or the date that that you're calculating recapture from, unless another date applies. And then in item F, if you finance the building partially or completely with tax-exempt bonds, such as municipal bonds, then you would finish this information. This is simply here for just kind of informational purposes, but you would issue the or enter the issuer's name, the date of issue. So in this case, it looks like we issued some bonds. We put this building into service a year later. There was probably that 1 year space just to identify and acquire the building, and then be able to purchase it. And name of the issue, and then the QSIP number. So that's the number that uniquely identifies a type of fixed income security from another. Now, if this is a flow-through entity or a pass-through entity, such as partnerships, S corporations, estates, or trusts, you would skip lines 1 through 7 and then go to line 8. If the recapture amount was passed through from a flow-through entity. So in this case, we have to complete lines 1 through 7. You also have to complete lines 1 through 7 if you are completing this form on behalf of a Section 42J5 partnership, because this is where we're capturing the recapture. So in number 1, line 1, we entered the total credits that were previously reported on Form 8586 in prior years. So I just put in a number, $21,000. In line 2, you have to actually do additional calculations. So these are tax credits that were included on line 1 that are attributable to additions to qualified basis. So if you had capital improvements and that increased your qualified basis, then you need to calculate whatever credits would have applied. Those are off the table when it comes to the recapture amount, right? So if you did a bunch of improvements and then you reported them and that increased your basis, but you ended up taking you ended up taking the credits based on that qualified the increase in basis, that's not subject to recapture. So there is a worksheet down here on page 2 at the bottom, and we'll kind of walk through this. This is the first reference to a form other than 8611. You have to go to IRS form 8609-A, which is right here, and then the predecessor was 8609 Schedule A. So about 2008, 2009 timeframe, they separated those into 2 separate forms. So you're going to get your information from here. We did not fill this at all for the purpose of this form. I simply kind of walked through some numbers and made up some figures to put in here for illustration purposes. So you would enter the amount from line 10, which in this case is the result of some complications here, or computations, some calculations between line 7 or line 8 and then the percentage on line 9. So you would just enter this number right here. You're going to multiply that by 2, and then you're going to enter the amount from line 11, which is the section 42F 3B modification. I simply put in $5,000. We're going to subtract that from the $20,000, and that gives us $15,000. Now, there's a decimal amount that you would need to apply for, again, line 14 of this, which is the disallowed credit due to federal gains grants. So if you received a grant, you can't have the credit apply to that amount of money. So in this case, we came up with a calculation that 20% of this amount is the applicable percentage. So we're going to multiply the 15,000 by the 3,000, or the 20%. That gives us 3,000. We're going to back that out, and that gives us $12,000. Now that is what is eligible here on line 2. Now we're going to divide this amount by the amount in line 15. So if we go here, line 15, so line 16 is the taxpayer's proportionate share of the credit for the year. The line 15 is the total credit amount. So this would basically be if the taxpayer was a 50% shareholder, then they would be allotted 50% of that credit. So in this case, Doe Enterprises owns 100% of the property. Doe Enterprises is eligible for this entire amount. So we're going to enter $12,000 back up here in line 2. So now we're going to subtract that from line 1, and $9,000 is the credit that is subject to recapture. Now in line 4, we're going to enter a credit recapture percentage. And that gives us basically a table down here. So if the recapture event occurs anytime between putting the building into use and then the end of year 11, then it's a 33%. That's expressed as a decimal, so 0.33. That is the percentage you would enter. And then the table kind of helps you determine what would happen if the recapture period occurred in, or if the recapture event occurred in subsequent years. So year 14 would be 0.133. The final year of the recapture period would be 0.067. So in this case, it's 0.33. We're going to multiply the 9,000 by that. We get $3,000. And then we're going to enter a percentage decrease in qualified basis. So there are instructions if you need to figure that out down here on line 6. So basically you would calculate the basis without regard to any additions to the basis after the first year. And then you'll compare the decrease first to additions to qualified basis. And the recapture only applies if the decrease in basis exceeds the additions in basis after that first credit period. So in other words, if you are putting more into the basis than what you decrease the basis over that 15-year period, then you're basically increasing the amount and decreasing the recapture possibility. So in this case, we came up with a calculation that there was a 10% decrease in the qualified basis. We're going to multiply line 5 by line 6. That gives us $300. Now, if you're a flow-through entity, you would stop here. Partnerships would take this directly to line 16, where they would calculate interest and then the total recapture. All other flow-through entities will just enter each recipient's share in their Schedule K1. So a pass-through entity other than an estate or a trust, and other than the Section 42J5 partnerships, which technically aren't pass-through entities for this tax credit recapture purpose, they would just keep going. So we're going to keep going. And in line 8, so if this is for an estate or a trust, they would only enter their share of the recapture amount attributable to the credit reported on its Form 8586. So in this case, we put $5,000. I can't think off the top of my head, how this scenario would actually play out. This is just a number as a placeholder so that we can walk through the calculations. In line 9, we're going to enter the unused amount of this accelerated amount from line 7. So in this case, I entered 100% of that, but there are instructions for line 9 on how you can determine what the unused amount is. And so there are certain calculations. First, you total the credits that you could not use in prior years. You'd reduce that amount by any unused credits that are attributable to additions to qualified basis. Then you multiply that amount by the decimal amount on line 4, which is this. You would multiply that by the decimal amount on line 6, and then you enter that amount on line 9. So then you subtract this from the net recapture, and we get $4,700. Line 11, you enter the interest that you calculate on the line 10 recapture amount. You actually have to use the federal government order overpayment interest rates that are published quarterly by the IRS, and you have to basically compound that from the original date of your tax return for the year that you captured any of the credit that was then subsequently recaptured, and you have to do that for every single year. So you calculate the interest, you compound it on a daily basis, and you take it from the original due date or of the tax return all the way up until either the due date of the tax return that you are reporting the recapture event in, or if you filed earlier, the date that you filed your income tax that year and paid the income tax. So that's how long the total interest is accruing, and then you have to do that for each year that you took a tax credit. So once you calculate the interest, obviously as a placeholder, we just put $400 here. Once we get that interest calculated, you'll combine that with the actual recapture amount. And then we're going to, in line 13, enter the unused credits that were attributable to this building that were reduced by the accelerated portion on line 9. And so there's another set of instructions on how to go through that calculation. So you would subtract the line 9 amount from the total of all prior year unused credits. So in this circumstance, we put in $3,000. We would subtract the unused credits from the total recapture amount, and that gives us $2,100. Now, if this amount was $6,000, we likely wouldn't have a recapture here, but we would have a carry forward. And this would be the low income housing credit attributable to the building that you can then carry forward. And you would have to go to the instructions for IRS Form 3800, which is the general business credit on how to report that. Now, if you were a Section 42J5 partnership, you skip all of this, you take this $300 right down to here, and then you would calculate the interest on the $300. So let's say that was $20 of interest, and then the total recapture would be $320, and then you would report that through the in the partnership return. That does not flow through to the shareholders or partners. So that's fairly straightforward. This is one of those tax forms where most of the information that you're computing happens off screen. You do need that data from additional forms from prior years, and this can be very complicated depending on how many buildings, how many years you've been taking the credit. Like there are a lot of factors that can make this seemingly straightforward, computation a lot more complex. So be aware. That's all we have for this tax form. If you want to dig deeper into the form itself, we've written an article on our website, which you can find simply by going to teachmepersonalfinance.com, type in IRS Form 8611, and you'll see our article appear. We'll also put links in the show notes to that article, as well as articles and videos we've written and produced on some of the other forms that we mentioned during the video. So if you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, as always, please post them in the comments section and I'll do my best to answer them. Thank you very much and have a great day.